All right, gold getting lifted to a record high amid rising rate cut hopes. However, despite the high rate environment, the precious metal has soared nearly 20% this year. For more on the runway ahead for gold, we've got Bill Baruch, Blue Line Futures president. Bill, it's interesting here because, on the one hand, we see so-called digital gold, crypto, Bitcoin surging, but that's more because a Trump administration is seen as being more favorable to it. Gold is just gold, as it's seen as a haven. So what is going on here? Explain it to us.
I mean, you're getting some that haven as some economic data has begun to deteriorate. I think the latest push on the heels of the CPI data that did show a little bit of disinflation. Now, I think too, as the Fed is being priced in to cut rates, I've been saying 3 cuts pretty much all year, and you're starting to see that third cut appear with a better than 50% probability. Once they start to cut, they typically kind of stay at it, and gold has averaged a 6% return within the first 30 days of a Fed cut. So I think we're starting to see maybe some of that hold forward a bit. But listen, with Trump probabilities of taking the White House improving and becoming the favorite, some of the policy we could see is trying to weaken the dollar. And if that's the case, gold is priced in U.S. dollars, and at least the way we're looking at it, and that would increase the price. So I think that's also a tailwind, maybe a tailwind for Bitcoin, but I think it's also a tailwind for gold right now.
Can I ask you, Bill, I'm just curious, we're talking about the metal. What do you see with the miners as well?
Listen, the miners are trading at 2-year highs. I mean, they're really starting to move pretty nicely. I'm liking what we're seeing in the mining space to what the energy space saw in 2021, the summer 2021, when crude oil finally got back above $70. A lot of the energy names were really lagging. And once they woke up, I mean, it's been a terrific move across the energy space and the names over the last couple of years. And I think that we're about the onset of that time now. It's finally kind of coming out of the doldrums. The mining stocks are waking up, and there really could be a long-lasting bull market at the moment.
Bill, one of the other things you've been watching is the ratio of gold to silver here. And so we have a chart of that as well. And largely, we have seen gold sort of outperforming for most of the year here. What is that? How do you look at them relative to each other, and what does that tell you?
Yeah, that gold chart is gold with silver as the denominator. So as silver improves at a faster pace than gold, you're going to see that chart show weakness. And that's actually a good thing for gold and silver because, when silver is woken up and it maybe not leading, but when it's trading well, that's really bullish for the complex. Over the past few days, we've seen gold diverge a bit and take the strength, and that's why we've seen that chart kind of rebound. Now, within that breakdown in May is when silver tested $33. Ultimately, silver's really trading on a lag to gold more than anything. I mean, it's had that rush of above 30 where it tested 33 early part of May. But I think silver should be trading $35 to $40 with gold, what it's doing. So there could be a bit of a catch-up trade here. And that's really how they work best, is when they're working together. So if silver can really wake up a bit and play a little bit of catch-up, get to $35, we have, at that point, would certainly have a clear breakout of gold. And some of my technicals looking back at this decade-long consolidation in gold can really say that gold should be testing $2,800, $2,900 when this move is said and done.
Bill, we're talking about different variables affecting the metals here. What about seasonality, Bill? Is this generally, typically a supportive time for metals?
Yeah, absolutely. I mean, you look at the prior month finishing up in June is sometimes a lagging time for metals, and they don't perform. But when the onset of July takes place, it's usually game on, and we can see really strength into the autumn. And I think that's something that we've begun to see in the precious metals. But you look more industrial, copper hasn't performed very well. It's really struggled. Some of the others like platinum and palladium, certainly aluminum is looking pretty ugly right now. I think they all can turn. One of the reasons why the more industrial space is lagged is look at Chinese GDP. Earlier this week on Sunday night, U.S. time, we saw Chinese GDP miss expectations, and the Chinese yuan has continued to weaken against the U.S. dollar. It's certainly sort of exporting deflation from China in a sense, and that weighs on the metals. specifically the industrial metals, which also more than 50% of silver's use is now industrial. And although it is a precious metal and follows gold, copper has fallen pretty sharply from where it was about 2 months ago, a month and a half ago. And right now that's been weighing on silver relative to gold.
Bill, always great to have you on the show. Thanks so much for making time for us.
Thank you.